Hello. In this video, I'm going to try to explain my opinion on the stock market. Now, I'm not going to try to sell you anything. I'm not going to try to tell you what to buy and sell. This is just purely, strictly a video on my opinion, what I think the stock market does. So, before I get into anything, what I like to have is a candlestick chart and the time frames, daily, weekly, monthly, in particular the weekly and the monthly time frames. Now, before I get into any individual stocks, let's say I was a person who had no interest at all in the stock market. The minimum I would do is invest into an index fund like the S&P 500 or the NASDAQ, DCAing into it, so dollar cost averaging every week, every month, every quarter. So that would be the minimum. Now, going on to the strategy, going on to the setup, you could use this on the market as well, even though I find it to be a bit more tricky, but you could. Now, individual stocks give us higher opportunity since they can run more than the market. Let's get into the setup. What I want to have when I'm searching for a stock that I trade and the stock that could fulfill my criteria that we're going to get to in just a sec is the first thing for me that it has to do is it has to be a stock in an uptrend. And how we can identify this is by identifying higher lows and higher highs. And on the long term, we want to search for stocks that do this. Now, I picked Nvidia here, which is kind of an outlier because it has these massive AI rallies, but still with the stock, we can find enough examples of the setup that I'm searching for. And we can also move on to others after this one. So you can see we have the MACD, the volume profile, the RSI. These are all just tools that can assist you and guide you. But the main thing that I look for is buying low. Now, how can I identify what a low price is for a stock? Now, what I want to search for is I want to search for the lows and the highs. And I can use a tool like the Fibonacci retracement if I do not want to do it by eyesight to gauge the retracement that a stock has performed from its peak and its previous low. So here we can see, for example, on this one, we can see the highs and lows better on the weekly probably, right? This one, we have pulled back 80% from our highs. This would be a setup that is that I would take. Now, the closer we get to this 100%, the more reward we have for the risk we're taking. Often what you will see what happens is institutions can start buying the stock and pushing it up from the 61.8 level. Now, since the strategy relies on us selling, once we have closed either on the weekly or the monthly or maybe even the daily, depending on how I feel and what I want to do, I want to get to the 80% retracement level as close as possible, maybe even lower, to maximize my risk versus reward ratio. Now, when we're in an uptrend and we get these pullbacks, these are great opportunities for bounces. And the plan is to sell at equal or higher highs. Now, from this bounce, going on to the next rally, we can see for this one, we have not closed underneath the 100% on the weekly. Maybe we have on the daily. Go over here and check. We've never closed underneath on the daily, so we would have been safe on both occasions there. Now, this strategy is not 100% because you can find enough points where it doesn't work. For example, we can come over here and we can see here the strategy has failed us and we broke underneath and continued our way down till we finally kind of found the bottom at some point. You could argue this was the plan all along, right? Going back to the 80%. Now, of course, it does not have to happen, but these are the setups that I'm looking for. This one would be for the future if this were to occur. Now, if we would fall underneath here, something that could come into play would be something like this, right? Now, I think we've spent enough time on NVIDIA. Let's maybe move over to some other stocks here. And hey, let's go on the monthly, because on NVIDIA we could also have just used the monthly. I like to use the monthly for everything because I also combine it with the MACD. Now I'm going to get to that later. You do not need this, by the way. So now for the monthly on Netflix, what I'm looking for as an example would be this here. We have this low right here, and we're in our range, which also kind of coincides with the previous all-time high. Now, this is an example of the trade that failed, right? And we closed below. And if this would fail, I mean, you have this, and the best opportunity you would get would probably be here, but depending on my risk tolerance level, I can decide to take a trade like this, or if I'd rather like to wait for an opportunity like this. Now, I don't have to wait because there are already stocks meeting our criteria, and these are the things that we are searching for. Now, for an example here, this is really crazy, and this happened. We can see here from way back here. This would be Microsoft. So you can see, and you can backtrack this really all the way back and see for yourself. So these are just all examples of the setup. And this is just the idea of buying low, buying extremely low, right? If you look at these things, like this could be an idea, depending on if we go up to all-time highs, the 61.8 here. But this could also, if something like this would happen, great. Amazon is a great example for the 61.8 retracement because we just had this happen right here and right here also. almost right, but also here this would have been the setup that we would have taken. This massive retracement of 80% here, and we can see maybe this could be for the future, right? And you just have examples like this everywhere you look, really, and you have stocks that are, as we speak, in these ranges, right? Even if we go to crypto, these are the massive retracements. Now, just for an example here, I almost had the 61.8, right? Here we had this idea, which unfortunately failed. Right now we have this in play, but we could also have something like this. And I think now is a good time to mention the MACD. Now, using this strategy combined with the monthly MACD can help you pretty much, because normally when we are in the green, we will not have these major pullbacks of 50 to 80% or more, right? These usually happen when the MACD has turned red, and you can see this on multiple stocks. When the MACD turns red, we really can sometimes get these massive pullbacks, and we can stay out of them by just staying out of these red times, or at least getting in when we have the transition into dark red and the buying pressure coming back slowly. Now, I think I've shown a lot of examples, and you can backtrack this yourself and kind of check it out, how often it works, how often it doesn't. I mean, even if your win rate would be 40-50%, let's say the risk reward was a measly 2 or 3 to 1, right? You would still be profitable after time, and this is the only thing that you need this strategy, because we are using the monthly and we are using these massive retracements that have taken years to even play out, right? We need time on our hands, so shares would be the safest option, and options are just options. Well, I think this was probably enough for the video. You probably have a good idea. I tried my best to explain it. Maybe it didn't work out in the best way, but at this point, I'm signing off. Bye-bye.